Alright traders, let's quickly take a look at the upcoming policy decision from the RBA on Tuesday. Now, coming into this decision, short-term interest rate markets are close to fully pricing in a 25 basis point cut at about a 90% probability. And unlike other major central banks that have been cutting rates for a while, this will mark the RBA's first potential cut of the cycle. Now, why exactly are markets expecting a cut from the bank this week? Firstly, the bank expressed more confidence in reaching the inflation target at their previous meeting that we had in December. And since then, headline inflation has stayed fairly low at 2.5%. We've also seen trimmed, or that very important core CPI measure, drop down all the way to 2.7, which is something they'll be happy about. We've also seen GDP basically on a downward trend for the past 4 years. And there's also external risks in the form of tariffs on Chinese goods, which is obviously a potential hit to both growth as well as exports. Now, as a result of this, we can see that markets have already been piling into Aussie dollar shorts, with institutional investors sitting on quite a hefty net short Aussie position as we go into that decision. So what are the possible opportunities then for short-term traders with this context? Well, we know that a 25 basis point cut is almost fully priced in. So the clear hawkish risk, or upside risk, if you will, for the Aussie dollar is if the RBA decides not to cut rates and they decide to play it cautious and just hold rates steady. This should see a huge upside for the Aussie dollar in the short term, because that'll basically force short-term interest rate markets to price out the cut that they've almost fully priced in for this decision. Now, a hawkish decision like a potential hold from the RBA could be quite interesting for the Aussie dollar versus the US dollar, which was testing major resistance as we went into Friday's close. Because what we had is we had the US basically pushing back on their reciprocal tariff plans, which was very good or positive for risk sentiment, which is of course something that drives the Aussie dollar. So if we were to get that hawkish surprise from the RBA with a hold, it could be enough for the pair to break above that key level of resistance. We also have the weekly options barrier resistance coming in at 64.30 and above that key technical resistance at 64.70 to keep on the radar in the week ahead. So what about potential downside risk for the Aussie dollar? Well, since a 25 basis point cut is almost fully priced in, it'll take more than just a 25 basis point cut to see sustainable downside for the Aussie dollar. For that, we would probably need to see the RBA acknowledge increased downside risks from tariffs, as well as a global slowdown concern for the economy. And that could see the bank suggesting a much steeper rate cut path. That could be interesting for potential downside plays in the Aussie dollar. I mean, think about it this way. At the moment, interest rate markets are pricing in about 3 cuts from the RBA this year. So anything that suggests even more than those 3 cuts could provide some downside pressure in the Aussie dollar. Now, the Aussie-Kiwi currency pair is at an interesting level if we were to get that potential dovish surprise from the bank. With so much bad news already priced in for the Kiwi dollar on the positioning side, and some recent forward-looking indicators in New Zealand actually suggesting some improvement in the economy, a dovish surprise from the RBA could be enough to see the Aussie-Kiwi extend on that very punchy resistance rejection that we had last week. We have the weekly options barrier support coming in around that 110 psychological level, also corroborated by key technical support. So that'll be a key level to watch to the downside in the week if we were to get that dovish surprise. So there's lots to focus on for the Aussie dollar this week. Also keep in mind that tariff risks and tariff news isn't out of the radar yet, so keep that in focus. And as always, stay nimble and trade safe.